This is Colin Cattell with Palisade Radio. With us on the show today is a new guest, Greg Mannarino. Greg started his career working for the securities and trading arm of the now defunct Bear Stearns. He's now an active trader, publisher of several financial books, and even a medical practitioner. Greg, welcome to the show.
I am happy to be here. Thanks for having me. Appreciate it.
Greg, I think it's safe to say that much of your research and expertise are centered on debt, government debt that is. You've been calling for a collapse in government debt for a little while now. What are the fundamental issues in place that lead you to speculate that such an event is imminent?
Well, all we need to do is look at what they're doing. They're trying to fix what I believe is a fundamental debt issue by adding more debt to it. They can't stop. And I think what people fail to realize is the issue of debt issuance or debt expansion in perpetuity is the backbone of the entire system. This is why we can't have a balanced budget, why here in the United States we are 18 trillion plus in debt. It's an insurmountable, uncorrectable problem that the world central banks are trying to keep going by, again, fueling this with more debt, creating massive distortions across the spectrum of every single asset class. And again, what do we know has to happen is at one point, this will correct to fair market value. Whether that's tomorrow, whether it's next week, or whether it's next year, we don't know, but we know it is going to happen. So we have a situation here. It's very interesting because I did a video about this today, where we have our politicians or our policymakers who are literally colluding with the world central banks to keep things the way they are. And it's not a situation that is geared towards the people. It's for the benefit of the world central banks, period, because they understand where this is going. There's no way out. They cannot do anything except continue to fuel this debt, cut interest rates, go negative, charge people to keep their cash in banks, and again, foster this mechanism of no price discovery whatsoever across the spectrum, again, taking away any resemblance of a free market, any resemblance of a free market economy, and there's going to be a price to pay for it at the end.
I got to agree with you 100%, but what metrics do you look to know when this debt bubble has hit its peak? I mean, there must be maybe debt to GDP, the inflation level. What factor is convincing you that the time is now?
Well, let me just back up a moment. I actually never believed, and this is the truth, that it would go on as far as it has. I had believed a few years ago that we had already gotten to the point of where we shouldn't go any further. But what I began to see was actions out of the world central banks that what was shocking to me, quantitative easing programs, backdoor quantitative easing programs, all kinds of things associated with that to keep this propped up. So what I see going on here now is I already feel that the situation has gotten so dire that we're seeing cracks in this bubble in debt. And how do we see that? Again, what the tipping point for me was the ECB actually instituting Japan-style, Federal Reserve-style quantitative easing. And as you are aware, once a central bank becomes so desperate that they have to do this to keep the system, I guess, afloat, because I have said this many, many times, the 2008 event, that was it. That was the party over moment. And what we're in now is nothing but a terminal side effect that they're trying as hard as they can to keep this propped up. So what makes me feel that we are at that moment now, or very, very close to an implosion of this, is, again, just looking at the actions of the world central banks and specifically the Federal Reserve. Because what people need to know is that the Federal Reserve has never stopped quantitative easing. Their quantitative easing program is in full force right now. It actually started while they were doing over quantitative easing sometime back in 2011, 2012, when they started requiring banks to buy debt, directly exposing depositors to this asset which can never be paid back. And they continue to print cash out of thin air at a blinding pace. It can never stop. Japan, I've been saying, is the poster child for this. The United States has now become the poster child for this. The European Central Bank, we already know several nations have gone negative interest rates, charging people to keep their cash in the bank. So this makes me think all of this, that we have to be very close to a breaking point, because how long can this go? Who would want to hold a bond at this particular time, unless you're insane? You're holding on to an asset which you're guaranteed to lose money over the long run. Makes no sense to me. But they're creating an environment of risk. And what we're seeing here is, again, this debt bubble become hyperinflated, which is causing an equity or a stock market bubble. And it's going to correct to fair market value. And when that happens, we're going to get a resetting of everything, again, to fair market value. So assets that have been suppressed over long periods of times, for example, we were talking earlier, precious metals, are going to correct to fair market value. And there's no way out of it. So again, we have a situation where they're trying to keep this inflated by any means necessary, but it won't work. And we can just look back on history, and I always say, people, look at history. Look at every single financial and economic bubble that we've ever had. Every single one of them, without exception, bursts. And why? Because they rise above a level that can be sustained by any means. So again, world central banks are trying as hard as they can to keep it propped up, but in the long run, it won't work. Is going to create a massive snapback moment that, again, I have used this term, is going to rock the core of the earth, because this is not just a financial problem. This is a resource issue that has been created. We've created an alternative universe in many ways by borrowing cash from the future to sustain this better now. We've created a population boom which has paralleled the debt, and it is going to correct.
What do you make of the US dollar's move in recent months? And this is something we've been talking about on Palisade Radio of late. The chart is starting to look parabolic. Is this a case of the US dollar being the best of the worst of all the currencies? Or do you see something else that's causing this rise in the US dollar?
Well, we'll have to look at currencies relative to each other. There's no doubt about it. We are in a full-blown currency war at this particular time, and we're going to see this is going to get much, much worse, in my opinion. And I do believe at one particular time, the Federal Reserve is going to have to act to weaken the dollar. We keep hearing from more and more multinational companies who are blaming the dollar for misses on their revenue. And again, this is because of currency conversions. This is why Janet Yellen, for the past couple of days, is being grilled in front of Congress, and there's a lot of questions being raised as to why she's not, why does the Fed keep stepping back? Why does the Fed keep saying, no, we're going to be patient, we're going to wait, we have to wait for this metric and that metric, because they know they can't do it. They do not want a stronger dollar. They've made this plainly clear to every single one of us that they're nowhere near their inflation target of 2%. I think we're somewhere around 0.8% at this particular time. So there's no way this is going to happen. So the US dollar right now, I think this is a knee jerk. Whenever there's political or geopolitical strife, you get a knee-jerk reaction. People fall into the dollar, but the Fed will act, in my opinion, to weaken this dollar. So forget about any type of a rate increase anytime soon. It's not going to happen. I'd be very surprised. In fact, I'll fall off my chair if they do this even by the end of the year. I can't imagine a situation where they can do it.
You mentioned precious metals before, so let's talk about gold. Certainly the precious metals must play a part in all of this, or they at least will act as a barometer to measure the level of uncertainty, inflation, deflation, debt levels. Why is gold off $700 from its high, and what do you see playing out near to midterm with gold?
There is so much in play with, and I'm more than certain you're aware of this, with regard to these assets. They are deliberately suppressed. I have no doubt about this. But all that presents to me is opportunity down the line. I don't care what they want to do to these assets in the short term. They can beat. I hope it goes to $1. It doesn't matter, because we know longer term there's no way in this debt expansion boom that there is no escaping from, that these assets, which are priced in US dollars, will not reflect their true value at one point. It's an impossibility, no matter what they try to do through mechanism of naked shorting or however they want to manipulate the market. It's not going to work in the long run. And we are going to see, I think, and I've been saying this for quite a long time, a moment where the price of gold is going to be twice the Dow. For example, if we get Dow 4,000, we're going to get gold 1,000 per ounce. This has been a prediction of mine since I wrote my initial work, The Politics of Money. I still think that is going to happen at one point, because it's a very simple mechanism to understand how this has to play out. All of the speculation in the U.S. equity market has been fueled by a runaway central bank, more particularly the Federal Reserve, that has, again, artificially suppressed interest rates, taken any resemblance of a free market away, creating an environment of risk. So all we're seeing is cash move from one asset class into another. Basically, these are just distortions. So these distortions at one particular time will have to correct. There's no way out of it. So what we can expect here is, again, cash to move from a risk-on environment, or from the stock market or equities, into suppressed assets. And these suppressed assets are going to be commodities, and not just gold, not just silver. I think these two in particular have been suppressed more than anything else. But all commodities are going to rise across the board, which is going to create an environment where these resources are going to become very difficult for people to obtain based in dollars.
I'm very happy that you brought up suppression and manipulation, because I want to make a point that I think you'll agree with me on. Gold and silver being manipulated is not the fundamental reason that gold and silver will rise. In fact, it's only worth manipulating these metals if the fundamentals are already present for it to be higher. Hence, you can trade on fundamentals of silver and gold and profit. That is, silver has to go up because supply is low, demand is high. So sure, the price might spring to the upside higher and faster if the manipulators lose control. Do you kind of agree with that whole concept?
100%. We are absolutely on the same page. There's no doubt about it. Again, they need to do this for several reasons. Again, we have instruments, these pieces of paper with numbers printed on them, that we are forced to believe. Well, what they're trying to convince people is real money. It is not real money. It is currency backed by nothing. And if gold and silver were to appreciate to fair market value, people would say, hey, I don't want to hold these pieces of paper with numbers printed on them. I want to hold something that's going to be going up in value. And there's no doubt about it. This is what is going to happen. I've been buying both these metals, as well as platinum and palladium, for years upon years. I will continue to do that until I have no idea when. I just feel that that's the place where people need to be. It's, in my opinion, as a trader, it's the greatest trade on earth. Bet against the debt. And the only way to do that is by holding a hard asset, and becoming your own central bank. It's all part of the same thing.
We received a question from a viewer today, and I think you're the perfect person to ask. The question goes something like this. Greg, I'm hearing various doomsday scenarios that may occur if the debt bubble implodes or the dollar hyperinflates. But how will that affect the price of the metals and mining stocks? And the focus in this question is on the word price, because since these assets are priced in US dollars, what can we make of all this? Does such a scenario make a gold bug wealthy overnight? And the final component to that question is, can you provide any historical precedent, such as the Weimar Republic, to give us an idea on how this might play out?
This is my take on all of this here. Again, we're in an environment where the world central banks are obviously very, very desperate to keep the price of metals suppressed, to keep the system propped up. That's all they can do at this particular time. So all I know, and I know this, look, I know my heart is going to beat in the next second or two, is we are going to witness a moment where this artificial environment of risk is going to end. And when this artificial environment of risk ends, all we're going to see is a mass exodus of cash, leaving some certain types of assets and going someplace else. This is what always occurs. We see this over and over again. Every time the market will go down, even just a few hundred points. You see cash move into what is deemed safe assets. For example, bonds, which I think are, ridiculous, and into gold and into silver. But when this whole thing really does come down, what people need to understand is this market is so distorted right now and so grossly overvalued but you can ask just about anyone who has any grasp of multiples and PE ratios and all this stuff on this market. We are so massively overvalued that something has to give at one point. But again, the Fed is making sure that they keep the risk on environment going. And we heard again from Janet Yellen talking about how they're going to, be patient with interest rate rising. They're going to use metrics that either do or don't exist. They're going to conjure them up as we go along to keep the environment of risk going, because all this is doing is fostering that wealth transfer. It's a simple wealth transfer effect. And what they've decided, again, what they've done is they've turned the whole system upside down. Of the financial system where people would earn a reasonable rate of return on their cash, even in a savings account, doesn't even exist anymore. It does not exist. The whole system is, and I refer to this as an economic black hole. And that economic black hole at one point is going to be filled in some way, if you think about it, when this whole thing reverses, and it has to. No environment like this has ever gone in one direction in perpetuity, where you have the equity market never correcting, you have precious metals never correcting. But this is worse than anything we've ever seen. These distortions are so massive and so I won't even say astronomical. They really are. That when the moment comes, when this all decides to correct, I think it's going to be very rapid. I think there's going to be a lot of fear here. And the people that are not in the right spots here, that are believing that the system is real, the system that they're told that exists really doesn't, this debt-based economic model. When this ends, and again, I think we're very close to it, the one who is holding more hard assets is going to win here, period.
Greg, I noticed you said that the only way to short the debt, or the best way to short the debt, is buying precious metals. Couldn't agree with you more. Are you considering any other strategies? For example, one of our other guests, Trey Canepa, has a strategy to short the 10-year bond yield in Japan. I know there's other ways to short debt around the world, of course. Is that something that interests you?
Oh, absolutely. You can do this in so many different ways. And I think this is what's being set up here now. And we're hearing more and more pretty lofty people saying the same things. Robert Shiller, Nobel laureate, talking about a bond market crash. You've got billionaires who are announcing that they're pulling out of the U.S. equity market. So what does this mean? I mean, you can short this whole thing in every conceivable way you want to think about it. You can short the currency. You can short the market itself. Use inverse ETFs. I mean, you can go crazy with this stuff here. There's no doubt about that. But again, I think holding a hard asset in your hand, has got to be the best way, and the easiest way to sleep at night, I think. Because if you want to put that into a perspective, once you have acquired all of these fiat dollars through the mechanism of like shorting whatever you want to do here, what are you going to do with it? You're going to convert that at one point into a hard asset. I mean, that's what I do. I trade these markets. Everyone knows that. I pull my profits out of these markets and I put it into precious metals, period. This is what I've been doing for a very long time. I'll continue to do that, again, until whenever. I think it's a mechanism that works.
Greg, where can listeners go to find some more of your analysis?
Just go to my website, traderschoice.net.
All right, there you have it. Greg Mannarino, everyone, traderschoice.net. Thanks, Greg.
Thank you for having me. Appreciate it.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?